Hello, Mavericks. How's it going? This is Rob. It is April 4th, 4/4/22, and we had an up day. Now, we talked about this in the trading room. We talked about how last Friday we had a very convincing hammer candle, and that Monday was going to be the thing that told us the rally's on, or we still have some more room left to go to the downside. As you could see, this candle is about the best candle you could possibly ask for. Opened up at pretty much the low, went a little bit lower, but then climbed all day long, stayed strong, and then closed at the highest point of the day. So on Monday evening, we know that the market went out with a supply and demand imbalance. Look, things can always change. There can always be news, but we know that that imbalance is likely to carry over into tomorrow morning. So let's talk about some of the news we had today. One of the things that's really happened is Russia is in retreat. Now, I don't want to get too overly dramatic about that. They're not in retreat. But what they're doing is they pretty much have given up on trying to take Kyiv. And they are now saying we're going to focus all of our efforts on the eastern and southern part of Ukraine. So right now there is a lull in the fighting. There is less fighting going on, which, the markets genuinely like that when there was a little bit of peace in the world. Today, take a look at the heat map. Big tech was shining. And when you take a look at the advanced decline line, you'll see that only about 60% of stocks went up today. Look at all the red in there, but then look at that green. Apple up 2.3%. Now, just the reason I love this heat map is that it shows you how big each stock is in the S&P 500 score. So let's just take a look down here. Medical instruments was very weak today. Guess what? That's about a fourth of what Apple does to the S&P 500. So when Apple, Microsoft, Google, Amazon, Tesla, and Facebook, when they're all up over 2%, it covers up a lot of messiness underneath the market. We did see some banks were pretty weak today. Banks were weak as well. And so while this was a great up day, it was really a narrow gain in the big cap tech stocks. So again, advanced decline line. One other thing, Elon Musk did disclose that he now owns 10% interest in Twitter. So we have this up period. We've got the Qs looking well, even stronger. I mean, look at this candle. This candle is just insane. Open at the lows, close at the highs. There was buying all day long. Remember, we've been talking about this last high and saying if we can break through this last high, I will become more bullish. Remember saying back here, I don't want to be bullish. I don't feel like being bullish, but I have to be bullish because of the technicals. And then we kept running. We had our pullback. And even the weekend said, I don't feel like being bullish. I don't feel like it. I feel like the world's in trouble. I feel like inflation's high. I feel all these things, but the price action is what we trade. And this price action is fantastic. And I said, if we break out above this last high, I have to now go to a +3 market. I'm at a +2 right now, but I have to go to +3. And you can see we're starting to see the turn. And we're starting to see the cross here in the 20 and 50. And again, these are pretty big signals here. Take a look. We got a cross here, and you saw what happened. Usually when you get this kind of cross to the upside, it leads to more upward action. So the market is bullish. It's absolutely bullish, and that's really all there is to it. So let's take a look at the market outlook here. We had a +2. We're going to stick with that +2. We had a +1 for the week. So the S&P went up about 0.7% today. NASDAQ went up 2%. We think that this was going to be a +1, kind of +1, +1.5 kind of week. And we already got a pretty good move, especially in NASDAQ stocks of 2%. I still think we're going to have an up week, but I'm definitely tempering my expectations of what we do Tuesday, Wednesday, Thursday, and Friday. But it's still bullish here. Everything is pointing us to be a bull here. And I'm going to say this one more time. If you don't feel like being a bull, I'm with you. I'm with you right there. We could talk about all the things that are wrong with this world right now. I mean, other things, if you take a look at shipping rates are like collapsing. The transports are underperforming. There's a lot of things out there that is signaling we could be heading into recession or there could be trouble. And I'm not ignoring those things. And I fully well understand them, and we can chat about them and talk about them. But remember, as a trader, you're not trying to figure out what your bias is towards the market. Guess what? You already know that. What you're trying to figure out is where this market is actually going based on supply, demand, support, resistance levels, trends, and everything that you know from technical analysis is telling you this market is likely to go higher. It doesn't have to go higher, but it's telling you it's likely to go higher. So as traders, we always trade the price action. So I've got some potential trades in here. There's good trade setups on both longs and shorts. Obviously, the long setups are a little bit better, but I was able to find a decent amount of short setups as well. Let's start off first with Piedmont Lithium. We talked about this one in the trading room. I had this as my number one pick in the materials sector. And you can see here a nice gap higher. And then we sold off a little bit into the close, but still, that's a clear breakout. I really do like how this one is going. I know some people are going to send me a message saying, hey, Rob, is it too late? No, take a look at this. We've based now for 2 weeks, ascending triangle, and we broke out. We could easily see a 2-week run out of this move here. So I still like it here. I had 80 as my short-term target. It's almost got there today. And I think that's going to be the right place to be for the next week or two. If you're willing to go out further, I think we could easily see into the 85, 90 area. But for right here, right now, I still like 80 as that target. Another position I came across was FIGs. I've never traded this before. This came up on a scanner. That's why we love our scanners, because you don't have to know all the symbols. You don't have to know what everything's doing. All you have to know is what is it I'm looking for. And this is a retailer. They make clothing. I have no idea what they do, but after a really nasty, long downtrend where, this thing couldn't catch a break, we bottomed out. We had some sort of news here, and people have been buying off of that news. So we had this big buying here from 16 all the way up to 22. That's about a 40% run. And look at that. No one wants to sell. No one wants to sell. It refuses to go down. It's actually getting a nice pop here. Let's talk about these kind of stocks. This is what I call a first stage uptrend. And these could potentially be big trades. But the one thing we can't ignore is that this company was garbage for the last 4 months, where every single rally was sold off. Every single one was crushed. And so we have a turn in the stock. I have no idea what happened to the company. I don't even care. But I have to recognize that, okay, this company might still have some bad news hanging around it. It's not like a stock that's been in an uptrend for a year and you know that things are going pretty well in the company. This is a turnaround. So this is where I like to play these with options. I like to play everything with options, but even more so saying, okay, I'm going to take a shot here. I'm going to take a shot up here. I think, again, 24 is my short-term target. I think that's a very easy target to get to. Something like a 23-24 bull call spread. Again, this is just a wimpy trade. It is like the wimpiest trade in the world. But in case this thing really tanks and actually has bad news, and this was just a selling opportunity, you have a very defined amount of risk. And then you really get to decide how bullish you want to be. If you say, hey, Rob, I like this one all the way up to the 26 area, maybe even up to 28, then you're going to want to change your strike prices. You may just want to go long calls. Long calls on this one around to 26 would be a fantastic trade. So I just want to explain that these kind of first stage uptrends and first stage downtrends on the short side, you have to be a little bit wary of them, because every rally has been sold for months and months and months. Why is this one different? The chart is showing us it's different, but there still could be some bad news hanging out on this stock. On a sideways trade, I've got Dish. All right, now this is where, looking at this one, you really have to say to yourself, okay, is this consolidating for a breakout and run higher? Or is this more is coming up to the top of the range, is going to hit it and come back down into the middle of the range, which is 31. Okay, so for me, I don't have a strong opinion on this. I like it sideways, but I'm looking at this saying, hey, I think I might want to trade this one a little bit bullish, like a plus half bullish. This last 5 days, we've had a pretty good run. So I think if you want to look at this one, I actually like the 33 strike. The 33 strike for what I'm looking to sell on a butterfly. So doing something like a 31, 33, 30, I'd probably just do a 35. I wouldn't go up to the 30, 35. I think this is a decent trade. So again, it's going to be a slightly targeted butterfly to the upside. If it does come up, it breaks out a little bit, probably gets up to that 34 area and settles back down. And even if it stays around this 32 area, that 33 butterfly will still be a little bit profitable. Let's get into some shorts here. This is Overstock. All right, now there wasn't any great triggers for shorts today that I saw. So I'm building a list of saying, okay, which ones are looking good here. We've got some pretty decent support here at this 42 area. It's looking like we had a very mild bullish candle here. This one could easily pop up for the next 2 days. I would love to see this, and then I would love to get a nice confirmation candle to the downside. So if this thing does break 42 tomorrow, I think you can take a shot at it. I think 39 is going to be your next support on this one. That is, that's 10%. It's 10%, so that's a nice little move to the downside. But I would like to see a little rally up and to short it, or maybe a little bit more of a base and a break. But like I said, there's nothing that's triggering great right here, right now. Another short, this is Capri Holdings. They're a retailer of clothing. You can see here, we've just got this bear rally, came up here, had one day where it jumped up, and then they sold that off. And we're now below that neckline there. Next area of support is going to be in this 50 area. We're going to see this, and that's really where we are right here. That's the trade I like, is that basically sell that 50 and buy like the 52. So the 50-52 bear call spread, you're probably going to get about 90 cents on it. You got about $1.10 at risk. And basically you're saying, I think the stock's going to hang out here below 51 and possibly break through that 50. That's going to be this trade setup on Capri. Let's look towards tomorrow. I think you can expect more buying tomorrow. We closed at a high. There's no question that we had a supply and demand imbalance at the close. Now look, we could easily see a up morning and maybe a fade in the afternoon. That wouldn't surprise me at all. But I think ultimately we don't have as strong of day tomorrow as we did today, where the Nasdaq's up 2%. Maybe the Nasdaq goes up 0.3% tomorrow. Maybe we gap up 1% and then we sell off to where we're basically barely up for the day. I could easily see a day like that. Tomorrow we do have ISM services, and we haven't heard any Fed governors speak for about 3 weeks. 3 weeks ago, they were extremely hawkish, much more hawkish than the market expected, and it actually spooked the market a little bit. It's going to be interesting to see what they say tomorrow. We may be getting some more very aggressive Fed speech, and that's going to move interest rates, which, we know that higher interest rates are going to be problematic for some stocks, especially high-valued tech stocks tend to not do well under those. Then we are right in the shoulder season of earnings reports. It's April, so we get our first earnings announcement probably in a week or two, somewhere around April 15th. So right now, there's just not a lot of earnings. That is the market roundup. Thanks for joining me, everyone. Goodbye.